Coming up on the program, South Sudan injects dollars into market to close currency gap. World Trade Organization to boost African vaccine supply chain. Kenya Bureau of Standards approves 40 new standards to enhance cybersecurity. Thank you so much for joining us on Business Incorporated. I'm Ini John Mekwa, where we kick off the midweek show with market numbers, where almost all markets we track are mostly in the red. Let's begin with, in Nigeria, the All Share Index saw a marginal increase at intraday. Hopefully, the green streak will be sustained till the end of trading, as the market has been bearish for 7 straight sessions. JSE of South Africa was also in the green, adding 0.38%. Only the EJX 30 declined 1.33% at intraday. Kenya closed Tuesday's session with a significant gain of almost 2%. Over in the Middle East, investor sentiment were mostly positive. Dubai's index gained almost 1%, while Saudi Arabia and Qatar added 0.20% and 0.18% respectively. Abu Dhabi index was the only decliner, down over 1%. And in Europe, stocks were mostly higher today after U.S. Federal Reserve officials reiterated their dovish monetary policy stance in the face of investors' concern over rising inflation. Well, we have Conrad to tell us more about what's going on in Europe. Hello, Conrad. Good afternoon.
Good afternoon, Ini, and hey to everyone in Nigeria.
Yeah. Well, China has overtaken Germany as UK's biggest import market. That's for the first time records began, the biggest contributor. A fall in the number of German cars being bought by Britons. How much of a blow is this to the German auto industry? And are these problems here to stay?
Well, Ini, of course, this is not good news for the German car makers, although I have to say it's not perfectly clear how much of this has to do with Brexit and how much is due to COVID-19 lockdowns. In January, the showrooms of the car dealerships in the United Kingdom were still closed, so it really wasn't the perfect time to sell cars. Another factor is important to keep in mind. The imports to the UK from China increased so much because of many COVID-19 related goods that the UK bought from China. For example, textiles, for masks and for PPE, personal protective equipment. This, of course, is not going to continue.
Well, in the dispute over vaccine delivery shortfalls, the European Union is taking legal action against AstraZeneca. How much of a case does the EU have? Is this a kind of proxy for Brexit?
Well, the CEO of AstraZeneca, Pascal Soriot, he just told the Financial Times that really the UK has been getting priority access to the vaccine of AstraZeneca. He says this was part of the agreement with the University of Oxford where this vaccine was developed. On the other hand, I think it's fair to say that the problem with the blood clots that very few people had who got vaccinated with AstraZeneca's vaccine was very much exaggerated by many national health authorities and also by many media in Europe. So I have to admit a little bit of, Brexit revenge might really have played into this. That makes it even more important to say that in terms of the AstraZeneca vaccine, the benefits by far outweigh the risks. This vaccine really has saved many, many lives in the UK. It really has been a great success.
Yeah, well, revenge mostly have backfire, so we hope this doesn't. Well, business climate in France has risen to the highest level in 3 years. Why are the French so confident and more confident than business in Germany?
Two factors are really behind this. In France, most shops and restaurants were allowed to open last week, while here in Germany, still many shops are closed. And in terms of restaurants, well, only in parts of the country, some of them were allowed to open. And most of the times, only restaurants and their, al fresco seats and tables, not the seats and tables inside. What's more, France's economy did much better during the first quarter than Germany's. France's GDP in Q1 was plus 0.4%, while Germany's economy contracted by 1.8% in the first quarter of this year. That said, while, yes, Germany's business sentiment is not as good as the one in France, it's still not super bad. The latest reading of the IFO index of business climate here in Germany has risen to the highest point in 2 years.
Well, good for them, and we hope it keeps rising. Well, thank you so much, Conrad, and enjoy the rest of your day. We'll move over now to London, where Juliana is waiting by at the studio in London to give us updates. Well, Juliana, good afternoon.
Good afternoon, Innie.
Yeah, stock markets have lost some steam because traders are focusing more on talk of asset purchases being tapered in the U.S. What's going on in the market at this time?
Yeah, you're right. It seems to be the banking shares that are under pressure within the square mile today, and a lot of this sentiment is coming stateside. We've had a couple of comments by Federal Reserve members suggesting that interest rates, or the movement of any interest rates, is still a long way away. And of course, we know that very low interest rates don't help with profitability of the banks, which is why all the big hitters are in negative territory in London today. Barclays down 1.73%, NatWest, HSBC and Lloyds all down between 1.4 and 1.7%. The FTSE was pretty much trading flat at the start, but it's very much in the red at intraday. The all-share is down 0.04%. The FTSE 250 down by 0.25%. And the FTSE 250 is down by 0.83%. So FTSE 100, that was down by 0.25%. In the currencies market, the British pound is up on the US dollar by 0.11%, up on the euro by 0.25%, and up on the Japanese yen by 0.14% at intraday, Innie.
Yeah, and even more corporate now. British Land has reported an annual after-tax loss of £1.1 billion for a second time. What's driving this loss?
Well, this is actually the third consecutive yearly loss for British Land, and they got themselves in a bit of trouble because we know that not only are they trying to recoup some of the losses from the pandemic, e-commerce is a massive issue when it comes to high street shops. A lot of people like buying their stuff online, and we know that a lot of high street stores have been in a long-running battle, not just with their landlords, but with the government, about trying to revamp business rates to make them a lot more affordable, because footfall in the high street has been falling, and it was falling a lot more before the pandemic. So they have posted pretty hefty losses. I believe their market value has gone down by about 10%. They're now worth an eye-watering £9.1 billion. Their biggest losses is coming from high street shopping centres, but also as well offices. We know over the past 18 months the vast majority of British office workers have been working from home, so a lot of investors are asking about the sustainability and the profitability of British Land, because we know that more of a hybrid working environment is becoming the in thing. So as soon as they announced these losses this morning, their shares were down 3.4%. One of the big corporate giants are dragging down the FTSE at intraday.
And I guess that's why Marks & Spencer are increasing their plan on enlarging their capacity to sell groceries online after also recording losses.
Yeah, the High Street stalwart has posted pretty hefty losses of over £200 million to the year end in March. Again, it's a similar story that we've been discussing about high street retailers during the pandemic. The shutdown of non-essential stores for pretty much a year has really dampened their profit marginability. This time last year, they were posting profits of about £67 million, and even then they were in trouble. It was pretty monumental for them to fall off the blue chip index going into the mid-cap index about this time last year. But there is a silver lining for them, and that's their partnership with Ocado, the kind of artificial intelligence delivery grocery firm. They teamed up with them about 6 months ago, and one of the reasons why their losses are not as bad as they could have been is because, of course, during the pandemic, lots of people have been buying groceries, so that partnership has really helped them. I believe their food sales are up by about 7%. They've already cut about 7,000 jobs. I believe they've shut down about 50 stores. Over the next few years, I believe 100 Marks and Spencer stores will be closing, and they are going to have to kind of revamp and revitalise just how they interact with the British public, because a lot of people who are spending money on clothes are buying them online. So I know that M&S are desperate to get into this fast fashion online capacity where everybody's heading.
All right, thank you so much, Juliana, and enjoy the rest of your day. Well, from London, we move over to Asia, where stocks were mixed on Wednesday, with some markets in the region closed for holidays. Australia S&P AX 200 led losses among the region's major markets as it closed 1.9% lower. Mainland Chinese stocks closed mixed, with the Shanghai Composite down 0.51%, while the Shenzhen Component advanced 0.23%. The Nikkei 225 in Japan fell 1.28% to end the trading day, while the Topix Index slipped 0.66%. Markets in Hong Kong and South Korea were closed on Wednesday for holidays. And in the U.S., stocks wiped out earlier gains and finished Tuesday's session lower as the market struggled for direction. The S&P 500 dipped 0.2% to 4,188.13, dragged down by energy sector. The tech-heavy Nasdaq Composite ended the day flat at 13,657.17. The Dow Jones Industrial Average fell 81.52 points, which is 0.2% to 39,312.46 after rising more than 100 points at a session high. Tesla, a big holder of Bitcoin, fell 0.3%. Crypto exchange Coinbase gained 7.6%, while the shares also getting a boost from a JP Morgan buy call. After Monday's gain, the S&P 500 is now in the green for the month of May. The S&P 500 is down only about 1% from its record high earlier this month before a pullback. Oil prices were steady today as concerns a possible resumption in Iranian supply would cause a glut were offset by hopes for stronger U.S. fuel demand after a drop in weekly inventory estimates by the American Petroleum Institute. Brent crude oil futures for July gained 5 cents to $68.70 a barrel, while U.S. West Texas Intermediate crude for July was at $66.05 a barrel, down 2 cents. Both benchmarks egged higher on Tuesday, adding their highest levels in a week amid hopes for rising demand from the approach of the Northern Hemisphere's summer driving season and lifting of coronavirus restrictions. Crude stocks fell 439,000 barrels in the week ended May 21st. Gasoline inventories fell 2 million barrels and distillate stocks fell 5.1 million barrels. Analysts have said that Iran could provide about 1 million to 2 million barrels per day in additional oil supply if a deal is struck and sanctions lifted. We'll take a break now. When we come back, more stories for you on Business Incorporated. Stay with us. You're welcome back to Business Incorporated on Channels Television. Well, the World Trade Organization says it is ready to support pharmaceutical companies in Africa to strengthen the supply chain of COVID vaccines across the continent and help its economic recovery. The Director General of the WTO, Dr. Ngozi Okonjo-Iweala, made this known at a virtual meeting of UBA Africa Day 2021. The day provides an opportunity to recite the political and socio-economic achievements and concerns of the African government and its citizens.
That the priority for Africa.
The UBA Africa Day conversation, moderated by the group chairman of the UBA and founder of the Tony Elumelu Foundation, Mr. Tony Elumelu, comes on the heel of a number of issues including the COVID-19 pandemic, which has piled up pressure on the African economy.
The priority for Africa must be empowering our youth and ensuring the creation of jobs and economic opportunity even during very, very difficult times.
Although the scale of devastation from the pandemic in Africa is less compared to other regions, the impact is still being felt.
You can't give what you don't have.
President Paul Kagame of Rwanda believes resilience and partnership is required to sustain the fight against COVID-19.
We are counting on our continent's resilience to see us through this crisis. Partnerships are also important. For example, we are working together as a continent with partners to build Africa's vaccine manufacturing capacity. But we can also learn from this shock to invest much more of our budgets in our national health systems.
So far, Africa has administered over 25 million doses, or 1.5% of the global total. This is seen as an unjust distribution of vaccine doses.
If we are to recover sustainably from this crisis, we have to correct the vaccine inequity that is so evident in the world today. The fact that we have vaccinated so little of our population is not acceptable.
WHO is working day in and day out to bring immediate solutions for the equitable distribution of vaccine doses. But it's clear that Africa cannot rely solely on imports of vaccines from the rest of the world. WHO is also working with the African Union to establish the African Medicines Agency.
The interaction also covers security and peace, what African leaders are doing to combat the rising insecurity on the continent, and steps that must be taken to address the imbalance of trade between Africa and other regions.
Today we have an opportunity, the leaders have decided it, signed on it, to build now the value chain and the local value chain that is needed in Africa to be able to have more transformation in our continent.
Africa Day has been celebrated since May the 25th, 1963, across the African continent and worldwide. The day was inaugurated by the African Union in celebration of the unity, diversity, and beauty of Africa and its people.
And in South Sudan, the country will inject dollars into its economy to bring the value of the pound on the parallel market closer to the official rate. The Bank of South Sudan exchange rate was at 253 per dollar on Tuesday, compared with 167 at the start of last month, while the black market rate in East Africa's biggest oil producers strengthened to around 450 a dollar from 600 over the same period. South Sudan's oil industry is a steadily recovery as a power-sharing government that ended 5 years of civil war remains in place, with production increasing to more than 170,000 barrels a day. That's still significantly down from levels before civil war broke out in 2013. The country secured a $174 million loan from the International Monetary Fund in April to help finance its budget and stabilize the currency. And in Kenya, the Bureau of Standards has approved 40 new standards to enhance information and cybersecurity, as well as safeguard consumer privacy. The new standards outline various techniques and methods for securing corporate information by an individual or managers charged with the responsibility of ensuring institutional data is safe. The standards also stipulate a framework for ensuring privacy in information and communication technology systems that store and process personally identified information. The World Economic Forum report 2017 places technology threats in the top 5 societal and economic risks by livelihood and scale of impact, next to weapons of mass destruction. And in South Africa, this country's spy agency is beefing up its economic intelligence unit so it can play a proactive role in supporting the nation's companies as they expand beyond their home base. Firms that could benefit from the intelligence operative expertise include telecommunications giant MTN Group Limited and Sasol Limited, the world's largest producer of motor fuel. The South African State Security Agency's primary task is to monitor and identify threats to national security. Its ability to fulfill that function and promote the nation's economic interest has been undermined by management shortcomings and its immersion in political power battles within the ruling party during former President Jacob Zuma's rule, problems has pledged to address. And in Zimbabwe, the National Statistics Agency, SIMSTAT, is for the first time conducting the 2021 Agriculture and Livestock Survey electronically using the computer-assisted personal interviews, which is expected to improve data collection, monitoring, and quality of work. ZimStats used to rely on paper-assisted personal interviews, which was labor interviews, and took long to process data. The organization is carrying out the ALS to collect data for use in assessing food security position at both household and national level, compilation of the contribution of agriculture industry to the country's GDP, and formulation of government's agricultural policies, among other things. And the president of Dangote Group, Aliko Dangote, has assured the new president of Tanzania, Samia Suluhu, that his company will increase its investments in the country and inform investors all over the world that Tanzania is now a good place to invest. Dangote currently has invested about $770 million in Tanzania. He lauded the new president's investor-friendly policies since she assumed office and insisted that while the government's role is to provide a conducive environment for investment, it is the role of the private sector to create jobs that will eventually lead to the growth and development of any nation. And that's it on the program for today. Thank you so much for watching. I'm Ini John Mekwa.